Unfiltered opinion.
Sometimes you have ideas and you're not quite sure why.
Secure the bag.
Sometimes you meet people and realize there's probably a reason why you stayed in touch.
Just listen.
Sometimes all the pieces just come together by themselves.
I'm Jimmy Moyana.
And I'm Simon Brown.
Welcome to Insider Exchange.
Compliments of 2020 Thrive. Welcome back. We hope you had a pleasant festive break and a great start to the new year. Welcome to Insider Exchange, another year for us to get into some unfiltered thoughts and opinions around everything to do with markets and investments and finance and everything else in between. There's a bunch of things that kind of fall in between there, and I'm glad to be back. I'm glad to have my good friend Simon back. Lunch on a Tuesdays, not lunch on a Mondays. We don't like Mondays.
Okay, no, I don't know. Hey, we're back. It's January. I'm off to Cape Town on Wednesday for 2 weeks. So.
Good things. Starting off the year on a good note. We're a couple of weeks into the year. Yes, there's a couple of things that have been happening while we've been away, but we're obviously going to catch up on all of those things and bring you all of the latest news and information. Before we get to that, we're coming towards the end of January. It's been probably the quickest January I've ever experienced in my life. And I say that worrying that there's still about 11 days left of the month. How was the holiday?
A holiday was epic. When I was off for almost a month, I was in Durban. I went surfing. I ate curry. I did nothing.
You found a ladder?
I fell off a ladder. Well, no, I take that back. The ladder collapsed under me. So I have to move because I was trying to change a light bulb and the ladder collapsed and I haven't changed the light bulb. So we're just going to move. And it's actually quite a cunning thing. How do you know when to move? Like if you're a renter, how do you know when to move? Well, when the light goes out.
Or when the geyser bursts, whichever is cheaper for you.
Yeah. Yeah. So but the foot is, I have a physio who's a magician. So she has me walking within 2 weeks.
Yeah. When you told me the story, I was like, this makes absolutely no sense. Why were you on the ladder in the first place? And then to be fair, I mean, I recently had to reprimand a family elder who was on a plastic chair picking mangoes for his wife. And I'm like, you're too old to do this.
Yeah. So look,
I know you love your wife, but come on.
It's only one step up. Look, my wife has been warning me forever that ladders are bad. And to her credit, she hasn't said, I told you so. So there's that.
But she gave you the look. She gave you the I told you so look, followed by now look at you.
And then she took me to hospital.
After the look.
Yeah.
Hey, people are joining in. Lovely to see you guys. Yes. There we go. Well done, Incognito. First time catching the show. Welcome. Jimbo, hope you had a great break as well. Great to see you again. We're going to be looking at a couple of things today. We're going to be covering, in Market Matters, we're going to be looking at Chinese GDP data. That's come out. We're going to be looking at the US inauguration. That's obviously taking place today. Hence the Washington Patriots shirt. Don't ask me why. It just felt like it made sense. And we're also going to be taking a look at Nigeria joining BRICS. I suppose let's start with kind of the easy ones. Nigeria joining BRICS. Now, 2 out of the 3 largest economies on the African continent are BRICS members, Egypt being the only one outstanding, which I think also had conversations about wanting to, kind of be part of that as well.
And I suppose let's be clear that the 3 largest economies on the African continent aren't bigger than any of the other BRIC members, initial BRIC members. Everyone wants in, right? There's a new grouping. They see what's happening with global politics. We've got all of the sort of G20s, G7s, and all of those sort of things. And so it's like, well, hey, but also a lot of sort of more thinking the non-aligned movement. I'm thinking African Union and there's probably similar-ish type things in Asia and other South America and other parts of the world seem to have just sort of gone nowhere over the last many decades. So BRICS is the new exciting bloc. Is it a trade bloc? Is it a political bloc? Is it just a place to
They're
party?
just calling themselves a bloc at the moment
Just
because
a bloc.
I suppose they can go into either side of it, trade or political. And it's weird because now with the bloc expanding at the rate it's expanding, you can't really, as a person that's not part of the bloc, so as an America that's going to come out and say, we're putting America first, we want the dollar to remain the reserve currency, you can't really stop people from joining BRICS. And if you're going to go threaten with wars, are you going to go wage war against every country in the world? No, it's not going to work.
We hope heck not.
Well, you can try, but I mean, it's not practical.
But it is also, and we've spoken before about the weaponization of the dollar and the buying of gold. That obviously peaked when Russia invaded Ukraine. But we've seen, worries about that. China started buying gold far back as 2018 for their central bank, aggressively buying. So this is kind of the other side of the equation in many senses. Because you notice BRICS, there's no interest from Europe. There's no interest from North America. It's everyone else.
Well,
It's
to be,
emerging
fair,
markets.
to be fair, Europe might go into its own recession, so maybe we don't want them as part of BRICS at this point.
No, I'm not sure that we want the other folks. I'm just
There we go.
observing that they are
Absolutely.
missing at the dinner table.
Absolutely. You're seeing a lot of South America, a lot of Asia, a lot of Africa, very little Europe, no North America. You're right. It's one of those. And I suppose with Australia as well, they're too busy focused on their spiders and kangaroos.
Yeah, and the things that kill them.
And the things that kill everything in Australia.
Yeah.
We're not too bothered. But I suppose they still have that alignment towards the UK throne. They still have
But they're like other ends
the
of
Commonwealth
world.
alignment
Yeah.
thing. And
Do they still have the Queen on the money? It would be king now, I suppose.
I think they might.
They're still a Commonwealth.
I believe they are. I believe New
So hold
Zealand.
on, but we're
and-
also technically a Commonwealth, but we don't have the. There's levels of. Okay.
We're part of the party when it's kind of a party.
When it's good for us.
Yeah, when it's not a party, it's not a party.
And our knowledge apparently is not very strong on any of that.
No, apparently not. What it is strong on is Chinese GDP data.
Yeah.
We had been talking about it the whole of last year. We thought we were never going to get to 5%. It's going to be a horrible year for China. You black sheep of the family, how dare you underperform? And then they come out with 5.4% and the world is quiet.
And the year average was 5.
Yeah.
So spot on, and the world was quiet. Now, there's a ton of people out there saying, oh, you can't trust Chinese economic
data, yeah.
Look, I mean, all data gets revised and this and that. And it's
So
all
does US
messy.
data.
Exactly.
Jobs data gets revised every time.
Yeah, and it was a big number, and 5% is. I mean, that's what Xi Jinping is targeting. Is 5% is his target. I didn't think they would get to it, to be perfectly honest.
No, we had our doubts. No, the reality is we definitely did have our doubts.
Yeah.
But at the end, when we look back on the overall performance of China, and you say, with all of the headaches that China had, all of the troubles that China went through, they still, and they didn't just like scrape through at like 4.8 or whatever, they still got to the 5% target that we set at the start of last year. So clearly that economy is able to, much like the US economy, surprise us. And I think the US economy as well has gone through quite a bit of surprises, quite a bit of, hey, we're doing really well. And obviously that's with the stimulus package that's gone through there. And that leads me to now the inauguration. I was saying to our teams that I don't want to be in markets at the moment, at least for today and possibly tomorrow. Because the moment this inauguration takes place, there's going to be some volatility. Yeah, we can say it's good for America or whatever, but the reality is there's been a promise that there's going to be a bunch of stuff that's going to be signed into law.
Yeah.
Now, we don't know what that is yet.
And these are executive orders, which is like a weird thing. I know we don't want to touch on the TikTok because we don't know what's happening there.
Yeah.
But, the majority vote in the House and the Senate, 9-0 at the Supreme Court. And then weirdly, Trump can issue an executive order and say, nay, all's good. Or actually, it might have been part of the law where he had 90 days. But so, and that's just it. I mean, the theory is that he might sign as much as 100 laws before we wake up tomorrow morning. 100 executive orders before we wake up tomorrow morning.
That concerns me deeply because knowing his track record,
we won't even be able to read half of it.
And for context, those that don't know the track, let's run through some of the cliff notes, some of the highlights, right? Bankrupted 4 companies, been impeached twice as a president.
Hang on. Bankrupted a casino, which is legislated to make money.
Which is impossible to do. Bankrupted 4 companies, one of which was a casino, impeached twice and is still being allowed to stand, was found guilty on, I think, 34 counts previously, felony accounts, and still is returning to the White House as if nothing has happened.
Do we let felons into our country?
Into the country.
I mean, Canada doesn't.
Yeah, Canada doesn't.
Because we've got G20 later this year.
So here's where I want to get on that. Are you a felon if you are a head of state and if you have a diplomatic passport? Because now, do we define you as the president or do we define you as the felon?
Well, remember when Putin was
I think
coming,
one trumps the other. Excuse the pun.
So, because when Putin was coming, but he's got an international arrest warrant.
From Interpol.
ICC.
Oh, the ICC. Yeah, but so does Benjamin Netanyahu. I suppose those are just going out at the moment.
Applicants must not have a criminal record to
Okay.
visit South Africa.
Okay, but
That does say a standard visit visa, which
right.
is
So
not
you don't. So
a head of
standard.
state.
That's it. A standard visit visa is a Jimmy and a Simon. We're not important
we're not
people.
important enough.
When you get to head of state level, you're dealing with diplomatic passports, diplomatic things. And if you're visiting by invitation of the president of South Africa, then I kind of think we forego all of these logistics.
Fun fact, Australia allows felons.
Huh.
Well, they have
They
to,
don't
right?
let you bring in your own apples, but you can bring in a criminal.
Well, that's because that's how they started. Remember, they were felons. It's kind of sweet continuity.
Oh, well, that's it. Appreciate the consistency.
Yeah, so I mean, it's going to be wild, right? I mean, without a shadow of a doubt, it's going
Absolutely.
To be,
Like I don't know what to anticipate from this inauguration.
No.
All I know is that we're going to be rocked, and it's going to be under the guise of yes, we're making America great again or whatever. But to what extent? Because now also with Trump having said the comments he said leading up to today. Oh no, BRICS is not allowed to have its own currency. Oh no, we're going to review AGOA. Oh no, we're not going to review AGOA. Those sorts of things,
Yeah.
you kind of don't really know until we see what comes out of those papers, what's going to be happening there, right?
I got to say, Trump doesn't care about AGOA. It's too small. He makes no money from it.
Yeah, it doesn't affect his.
It's going to go along perfectly fine. That doesn't stress me at all. But it's just, this is Trump 2.0. So we've seen this before, where it's shouty tweets that kind of drive policy, etc., etc. He's probably going to be better at it because it's his second run at it. He's also never going to stand for public office again.
That's it. So this is the year to cause this is the term to cause the most chaos you can.
Correct.
I want to know what people are looking forward to. I'm going to put it out in our community chat. I want people to tell me what they're looking forward to.
Well, hey, my Bitcoin's trading at all-time highs.
What is it? 109,000 now?
Yeah, and I hold some.
That is, but that's been pro-Trump, right? That's been the pro-Trump conversation. He came out very clearly to say, we're going to make sure we're crypto-friendly. We're going to make sure the SEC is crypto-friendly. And those kinds
Gary
of
Gensler
statements
is out, and yeah.
Yeah, those kinds of statements are what we're going to be in for, where Donald Trump is, I still can't wrap my head around it.
It's just, I mean, he's crypto-friendly because he discovered he could launch his own coin. That suddenly makes him one of the richest people in the world because his Trump coin, because it's you own a large slice of it, so it's one valuation. It added 36 billion to his net worth. Now, I mean, liquidity, the rug pool's got to be quite crafty here, otherwise it's going to be like the other lady. But
Haley Welsh.
that's her name.
Haley Welsh.
She claims she didn't know there was a rug pool.
Didn't know it was a rug pool, came out of it with lots of money. I don't know what happened, but my bank account has millions in it.
Have you had? I've had these offers. People slide into your DM. Hey, and they are quite. The one guy was quite blatant about how we do this.
Yes.
We hype it on your name, etc., etc.
That's
and
it.
As soon as the thing's gone up to X,
Yes.
we just start taking our money
pull.
and running. They take 20%. I take 80%, and they do all the work.
Yeah. Well, that's how rug pull works, right? So you leverage off of someone's popularity and trust in the space and say, Simon is a trusted voice. We will know that if he says this is something to go into, then everybody's going to kind of pile into that, right? So that's...
Yeah,
That's another story for
the other,
a
the
whole
other
other
one,
day.
of course, is Tesla. But then at some point, Elon and Trump have a breakup.
So did you just call Tesla a rug pull?
Not
Listed company, listed in New York, being called a
no,
rug
it's the other
pull.
Trump trade.
The other Trump trade. Yeah, and there's going to be a lot of those, right? There's going to be a lot of Trump trades this year that lead us to all sorts of things. And as you mentioned, rug pulls and things.
Yeah, the point with all of these things, get in early, take your money early too.
Yeah, because don't wait for the rug to be pulled, because you don't know when the rug pull's happening unless you are the one pulling the rug, right? So that's the bit of advice there. The safer option is just stay out of it.
Just stay away.
James, Doge, interesting element there. What was it? The Department of Government Efficiency. Also the Dogecoin, all of that. Jimbo saying to us on our live stream chat that he's not sure if it'll work out or to what extent. And it's to your point around the Trump trade or the Trump-Musk marriage. Like, how far does it go? Because typically in that kind of situation, right, your elected president, elected official relies on the billionaires' financial influence and muscle and all of that to be able to maintain kind of their political power and all of that. That's kind of what happened. Except if you were, of course, Vladimir Putin, in which case you told all of the financial guys to stay out of the political stuff and just go earn their money in the oil stuff, right? But in Trump's case, Trump, I don't want to say technically on paper, is a billionaire himself. And that now means that he's a different kind of leader. So in the past, you could wave it over, or your your leader that, oh no, you aren't as wealthy as you are, let us make you wealthy. But Trump doesn't know that. He already specializes in tax avoidance, tax evasion, and everything
Except
to do
these
with
things he's got. So remember he had that 100K watch, now he's got Dogecoin. So let's say you and I owned a little island and we wanted, I don't know, an American warship to come park here. So we buy ourselves a couple of $1 million of Trump coin and we send him the proof of payment. Essentially, it's a backhand bribe, right? Except it's not backhand, it's front door.
You've just revamped the bribery world for everyone out there.
So he's also got that 100,000 watch. So let's say you're a businessman and you get to have a lunch with Trump. How do you show him that you're wearing his $100,000 piece of rubbish watch?
Oh, he has a watch named
That
after
was
him.
last year. Keep up, dude. He's also got a perfume.
Oh my God.
But the watch is quite simple, right? So I'm at lunch and I'm like, hey, what's the time?
Yeah.
And Trump can see, assuming he can recognize his own watch,
You're assuming he knows what it looks like.
the 100K, and he now knows that you've basically given him 100K less some handling fees from a third party.
Okay.
And it's
So if I want to make $1 million donation to the Trump administration, do I buy 10 watches and wear all 10, 5 on them? Okay. Okay, so that's how we do it these days.
So fun fact on the Doge, the Department of Government Efficiency, which had 2 leaders, which was weird, but they've already discovered some efficiency. Reports are that the other chap, Vivek Ramaswamy,
Yes.
is out. Well, that cuts your head off his cost in half. That's efficient.
Fair. I'm so confused. There's so much happening in American politics. This is just, yeah.
Yeah. Remember George W.
Imagine telling the kids I lost their college money investing in the Hawk Tour coin.
And then you got to explain Hop Tour.
Yeah, right. That's a very loaded conversation that you're having with your children, right? So
Yeah.
I suppose the Trump coin does weigh out a little bit better from that perspective. Yeah, but that's market matters for this week. We've just gotten back. It's a lot. There's a lot happening. We're going to get into our deep dive. We're going to be looking at foreign investment tax in the context of South Africa. Should we be taxing investors that come into South Africa and buying things like property in South Africa as non-South African citizens? Should there be a special tax on that? We're going to look into that in our deep dive. Please stay tuned. Shout out to our TikTok community as well that's joined us. We're so glad that our California community is able to stay with us. Hey, we were worried about you guys there for a second.
Yeah.
But yeah, no, thank you to the TikTok gods and the legislators that kept you guys or the servers online. That's it for Market Matters. We're going to get into our deep dive. And we move on to our deep dive. We're taking a look at foreign investment tax. Should this be something that the government should be considering in next month's budget speech? We're going to look at it from a couple of different perspectives. We've seen an increase in the appetite for foreign investors to come and buy things like property in South Africa and to invest into the local economies. But they, at the end of the day, own all of those. And should there be a tax for that? Because it does then make valuations more expensive for locals. I think about Cape Town as the prime example from a property space, right? Where an investor can come in, buy 150 million rand plot of land in Clifton in the most comfortable fashion ever. But what that's done is now the whole of Clifton is now unaffordable for South Africans, right? And that's not just the Clifton part of it. I mean, just in general, investors coming in, buying up a lot of land or a lot of property at high valuations. And then for locals, it becomes more expensive. I saw something quite interesting on X, I think. They said that the average one-bedroom apartment in Joburg CBD is 150,000 rand, whereas the average one-bedroom apartment in Cape Town is 1.3 million rand.
Yeah,
granted, very different CBDs. Very different CBDs at the moment. But yeah, I mean, to the point around, should we then say, if you're a non-South African citizen wishing to buy things, the same way we have the Spaza shop debacle about business owners investing a minimum of 5 million rand and all of that, should we then be saying, if you're a non-South African wanting to buy up property or businesses or anything here, there should be a separate tax for you? And how do you govern that tax and weigh it up against things like wanting to attract foreign direct investment?
Yeah. So, I mean, in the Cape Town story, it's like, sure, that's surely an easy win. I remember, and this is 20 odd years ago, my brother-in-law was out and they just sold a flat in Muswell Hill, a tiny flat, barely the size of the studio in Muswell Hill in London. And we were at the V&A in a 3-bedroom apartment overlooking the mountain on the one side side, the harbour on the other, and it was cheaper than the flat in Muswell Hill. And his question to the estate agent was, do you take credit card? The answer was no. Estate agents, because of the transaction fees.
Yeah.
But I mean, for him, it was just laughingly cheap. And the point was, is that he didn't buy it. But even if he had, he would have used it once, twice a year for a week or two here. Maybe, the South African family would have gone. But it kind of then gives you a debt accommodation, a debt apartment. The idea around it creates economic activity. Airbnb, sure, but if a foreigner owns it and comes out for 3 weeks over Christmas and it sits vacant the other 49, maybe. And then it comes to the idea that we're not making more land and stuff. But so certainly I think there's arguments for it. Percentages and levels, okay, we can debate those. Maybe, is it just a percentage tax? Because all that does is just make it more expensive for the foreigner. And then if you're Warren Buffett, who cares?
Yeah, so expensive for the foreigner who's coming into the economy already with a currency that's stronger than the rand, most likely, right? So if you're talking euros, you're talking pounds, you're talking dollars, you're talking Saudi Riyal, anything there is worth more than Chinese yuan. Most currencies are worth more than the rand, right? So any investor coming outside, and those are the typical investors we're seeing, Saudi investors, Chinese investors, European investors, those are the ones that we're seeing at the moment. They come in saying, oh, it only costs 100,000 euros. Yeah. Oh, okay. And it's a huge property and all of that sort of stuff. So from that perspective, how are we benefiting as South Africans, as the local economy, as all of that? The real estate agent is benefiting because they get a commission. The department is benefiting because of the transfer fees and all of those things that happen
and
there.
The treasury because they get the tax bill.
Right. And then from an economy perspective, but even from a tax bill, they get one side of the tax bill because that person, when they sell that tax or when they sell that property, are not taxed as a South African resident, right? So we need to then now look at those tax implications. Yeah. The current seller that's selling to the foreign investor, that person on CGT, great, fine, lovely. But then what happens after that?
Yeah, and that's the point, right? So this foreigner's paid, let's say 100% surcharge, whatever. I mean, lots of countries do it in various different ways. Some are just like, nope, not at all. How does it in theory work? Well, a bit of cash flows around. You don't get more rates because that's not the valuation of the property. That's just an extra tax on it. So the theory is that you're trying to price the rich foreigners out. And therefore, the seller who wanted, what was the equivalent of 100,000 euros now has to only want 75,000 euros because they simply can't find that foreign buyer. I'm not necessarily convinced by that either. All we're doing is pushing the prices up.
That's it. And making it more unaffordable for the locals.
And we're removing some of the rich people out of the equation. But there's another layer up there.
Yeah, but so when you remove this layer of rich, you automatically start to attract this layer of rich because he or she's at that level saying, I want the price to be at least this much because from my property or for my tax write-offs or for whatever, it must be worth at least X amount.
200, 300,000 euros,
that's nothing.
Yeah. And then what about the oak who's got a place in Bryanston who can't sell because the foreigner can't afford to buy it? So, it works maybe in a bubble area like Cape Town, but the rest of the country,
That's it. And now you've created this disparity between what valuations look like in certain areas, and now everything becomes unaffordable, right? So now if I'm running a business in Cape Town, I'm running a coffee shop, my rent goes up because the properties in that area cost so much. So now as a local business, I'm suffering from the fact that, I'm in what they call a high demand kind of area, but because, as you said, those foreigners are not around for 49 weeks out of the 52, my business sits there paying rent for 52 of those weeks, not for, I don't get a discount for when my volumes and my traffics are lower.
They're not coming to buy cappuccinos. So maybe the solution is, for example, because, and we're changing track completely. Maybe it's a case of if you want to Airbnb your property, it's now a business and you pay business rates.
Okay.
And
corporate taxes and all of that.
Et cetera. Fair. Maybe there's a rule around if a property is unoccupied for a certain period, but that's such a difficult one.
That's difficult to prove and stuff, right?
I mean, I can just take the housekeeper and
it's occupied. Technically, it's occupied. Yeah. So, but from that perspective, how do we now draw the line between that and foreign direct investment? Because we're trying to attract.
Because we want that.
That's it. You want foreign direct investment here to grow the local economy, to invest in the local economy and everything, but you don't want it to sort of cloud out and isolate the local economy. So, how do you draw that balance?
And so, I mean, it's quite simple. With foreign direct investment, we are laying out carpets groups left, right, and center, G7s and 20s and BRICS and all the other bits to try and get them into it. So there needs to be a line. And just a quick look. So the countries that have restrictions, it's always residential and residential only. And then I just had a thought. Maybe the point is if this is owned by a foreigner or a foreign entity, and you can do that ultimately the beneficial owner,
UBOs.
Yeah,
Yes.
Your rates are double. Because that then does benefit the city.
Okay.
So if you or I buy the property, we've got rates, but there's a foreign rate and it's 2x or something like that. That then goes into the city so that the oak next door with the coffee shop could have a slightly lower rate. There could be extra cleaners on the streets, better maintenance, so that the community does actually benefit. So rather than a one-off hit, which doesn't do a lot too much, because again, to the foreigner, the rates bill is
minuscule.
nothing.
Yeah. Should we then be expanding that to other things to say perhaps we should have a local rate and a foreign rate? So I've seen it with like tourism. You know, when you go to the Kruger, you've got how much locals pay to see the animals and then how much foreigners pay to. Should we then be expanding that to property valuations and those sorts of things? To say, if Jimmy wants to buy the property, then we're selling it at 1 million. But if someone else, but that creates a disparity now as well, right? Because what's the true value of the property?
The seller's just going to say,
I'm incentivized to go for the higher amount.
Don't want
100% of the time, right? So how do we then create an environment where the locals are still protected and can access these things? So if I want to move down to Cape Town now, if I want to relocate to Cape Town, it is probably going to cost more to relocate to Cape Town than, well, it's definitely going to cost more to relocate to Cape Town than anywhere else in the country, first of all, right? But it also might cost more to relocate to Cape Town than to Windhoek in Namibia, for example.
Hey, I reckon there's large swaths of Europe and North America you could get to cheaper.
You see, right? So
not the fancy parts, not Paris, but, you know.
If we're sticking with the same narrative that Trump has around making America great again, putting America first and putting South Africa first. How do you create an environment? And I look at tax because that's really the only tool that government uses to do these things. They're not passing legislation fast enough. They're not, so tax is really kind of where you can see it happening. How do you then create an environment where Sai says, I'm leaving Rosebank, I want to go to Cape Town, but I want to go to Cape Town affordably. I shouldn't be paying European prices to live in my own country.
Yeah. And I mean, I don't know what the cunning answer is because anything you squeeze one place, you're shifting it.
Yeah.
If we took 100% transfer tax onto it, we just get richer people into it. And then the property that was 200,000, they're like, well, let's make it 300,000 euros or whatever.
To account for that, yes.
And then the very rich. So then it's no longer my brother-in-law. He's like, I'm out of this market. Then it's, the billionaires, not just the multimillionaires who come into it.
New plan, new idea. Should we introduce, if you own a property worth a certain value or a more or whatever, you are obligated to spend a certain amount of money in that economy. So you own a property worth €500,000. You are obligated every single year to spend at least 50,000 euros in local businesses in that country, or else something.
We take the property. So difficult to administer, but a nice idea.
Very difficult.
Because part of the way you could do it is just, maintenance on the property. You do
you hire garden services, you hire those things.
You're going to largely be doing that anyway. We can just raise the bar to a little bit higher.
Yeah, but that benefits the local players.
Because that's just it.
Right?
Putting out 100% tax is lacquer for Treasury, but
great. Treasury might use that for a bailout, and then that local economy doesn't benefit. So should we then say put on a spend obligation? I think would be the first country to do that. I don't know if other countries do that at all.
I didn't ever come across that.
I've never seen it where you're forced to do this, but at the same time, if you create that kind of environment, you run the risk of creating a situation where the South African market becomes completely unattractive, right? So people are saying we won't invest, we won't set up businesses, we won't do anything, and now capital dries up in other spaces as well.
And it's the unintended consequences. I haven't verified this, but in Australia, apparently your second home is CGT free. And the idea was way back in the day, just to get activity going. What happened was everyone went and bought 2, 3, 4 houses because the remaining houses were CGT free.
Yeah, so I'll pay CGT on the first one.
And created all sorts of shortages.
That's crazy. See, so we don't want that. We definitely don't want that. But we want a situation where if you're coming into a market where there are locals. Locals want to be able to participate in that market as well. You can't create...
We should get the Comcom on this, Competition Commission. Because like when Walmart buys Massmart, there's T's and C's, right? Create 200 jobs, do this, don't fire anyone, etc., etc. I mean, it is something which needs to be crafty, but not too crafty, because then you've got loopholes people can
and then
go
it's going to
through.
take 12 years to get through it.
And etc. and people will cheat it. But I mean, I intuitively don't have a problem that's saying, you know what, if you're making it difficult for South Africans to live in a part of their country, you can do it. We're not going to ban it.
No.
But you're going to pay for it.
We're absolutely not against investors and non-South Africans buying up property and investing in South Africa and all of that. That has its benefits and all of that. But understanding that if we're going to approach this from the position of wanting to protect South Africans as well, there must be some give or take, right? I mean, think back to the Cape Town scenario with it was on X a couple of weeks ago. Actually, I say a couple of weeks ago. It was on X last year, because we can say that now. And the most wanted, or one of the most wanted fugitives on the FBI's most wanted list, a lady that had a coin. It was
yes, one world coin.
Rucha Ignatova, that lady, right? There was a $5 million bounty out for her. There was, we laughed about it because South Africans, we find humor in these things, right? And it was one coin or something. It was some scam that defrauded people of about $4 billion or whatever. But so there was this thing that happened where I remember seeing a South African skit on TikTok. Someone was like, guys, we're South African, let's work together, we can split the money.
No, hey, $5 million.
Do you know what I mean? I was like, that's over 100 million rand, or close to 100 million rand. I was like, that makes sense for South Africans. But here's the thing. That person has been rumored to be hiding out in Cape Town.
Yeah.
Now, if someone is wanted and the price for them being wanted is $5 million, understand that person is worth significantly more than that $5 million to start with, which therefore means that they can afford things that are more than that $5 million. I mean, if you've scammed people allegedly of hey, we don't know, hey? Allegedly of $4 billion, right? Assume allegedly 2 of that billion is yours in personal net worth. Now you're going to say to that same person who's worth $2 billion that, hey, you now rank amongst the top, at 2 billion, you're probably the top 4 or 5 people in the country in terms of net worth, right? So you're slightly above Dr. Christo Visas, possibly around Michael Leroux's levels, founder of Capitec.
Patrice Motsepe is around there.
Motsepe is probably around the $3-4 billion mark, right? So you're not poor by South African standards, right? If you're going to say to that person, oh, we're just going to charge you 10 million rand for this house in Cape Town, that's not going to matter to them, right?
So
what is how do we balance that scale out, right? We want someone of that caliber to come and invest in South Africa to the extent that they're like, oh, maybe it's worth relocating to South Africa, because then that person is permanently contributing towards South Africa.
So is there not, are we not coming at this from the wrong direction? Why don't we just build some high-rise buildings on the foreshore?
Okay, and then?
Because it creates accommodation.
Okay.
So the trick is it's supply and demand, right? Lots of demand for Cape Town. Beautiful place. Off there on Wednesday, looking forward. But can't afford it, so we...
coming back at some point.
Coming back. But if there was more accommodation available, like, I don't know, like where that 150 million rand Clifton thing was, we'll build a 40-story building and put...
But you can't. You can't, because now the people that have bought next to that building and around that area of land are saying you're devaluing our property, right? So now you've got existing homeowners that do live there that say we don't want those kinds of buildings here. So that's something the city will have to debate.
You must go down the homeowners associations in the US. Yo, I hear you, and I get what they're saying. They're saying, look, my place is worth X, and if you put 100 apartments in next door, it's worth less than X.
Yeah.
I'm like, yeah.
But so how do you? But now how do you do that, right? So how do you say there's 100 million rand property in Clifton Beach, and then there's people in Khayelitsha that don't have running water?
Well,
same city, probably. You know what I mean?
So it comes to part of that, which comes to the whole idea around mixed use, and there's actually, and I'm going to go look at it when I'm there now, just down by Mooley Point, where the city has said this is land for we're going to build housing for low income individuals. Now, there's a debate what that low income for a family is. The argument is it's been put too high, but at the V&A where the Ranyazig market is, there was a very low income, very small sort of little building built for folks to live there. Because I agree with you, it's not just you and I who want to live in Cape Town. It's the person who lives in Khayelitsha and has to leave their leaking shack and catch a taxi
into work because they work in CBD.
If you're living at the V&A, where do you want to live? You want to live at
That's
the
it.
V&A.
If people can live in Rosebank and work in Rosebank, why can't we do the same for people in Khayelitsha, in Cape Town that go, you know what I mean? So protecting the locals, but at the same time,
the existing homeowners are going to be like, nope, not on my watch.
So how do you draw that balance? How do you then say we welcome, because we welcome investment into the country at all angles, right? But that investment must also not be investment that excludes South Africa, because then we're just going to keep perpetuating the unemployment crisis that we have and the problems that we have, right? So in addressing our underlying problems, those are the things we need to look at to say, yeah, it's all good and well to say South Africa is home to X amount of billionaires or whatever it is. But if we still have a 60% youth unemployment rate, we're just perpetuating crime, because those billionaires are now going to be the victims of someone whose opportunities are not there. So, and that creates a bigger problem, because then they're not going to come back, and we're going to have to come back to this one. Looks like this is one of those dives that's going to need a part 2, because we don't really have the answers.
We don't know.
If you have the answers, if you have some suggestions, and I think that's the value and the power of community, especially our community, is that we're not afraid to talk about these things and have suggestions put forward. Please, we're going to put the videos up. Slide into the comments, slide into the DMs, give the suggestions. How do you think we solve these problems without alienating any one particular side of the conversation, but achieving maximum benefit for South Africa and for South Africans? That's the question. That's what we're going to put out to our community. Please let us know. And that's exactly where we're going to leave the deep dive. And we're wrapping things up with Investor Insights. We're going to be taking a look at our thoughts for the year, what kind of year we think we could be in for from an outlook perspective. We're going to be looking at some of the price updates. I'm particularly interested in a couple of ones that have come out recently. And then we've got a special surprise for the end of our show. We're doing something new, and it's something that we're going to be carrying into the show for the rest of the year, because we thought, why not? This is the year to do it. 2020 Thrive. We're going to start off with the outlook. I think it's going to be quite an interesting year, and I want to get your thoughts on a lot of things, understanding that we might not have the time to get through all of them. But I think the kind of 2025 we're in for is one that, if I could sum it up in perhaps a statement, is we've been through everything. It can't get worse.
Hey, you saw those reports of a new virus coming out of China.
We've went through COVID.
It's like, done that, guys.
That's it. Been there, done that, got the t-shirt. So I genuinely think we're in a position where markets are optimistic because they've been pessimistic for so long.
Yeah, it's a fair shot. That is a fair shot. And I think we can say certainly the same for local. For the US, I mean, we've had 2 almost 30% years in a row. I'm a little more cautious on US markets. But I think if we look at Europe, if we look at emerging markets broadly, if we look at Asia, we look at South Africa, I think there's a sense of it's been a 5 years. We've come out the other side surprisingly intact, all things truth, and that there is some cautious optimism out there. And certainly that's my sense for much of it. Except, of course, and who was I chatting with? I think it was Simon Fulmore for Independent Securities. And he was talking around value and emerging market stocks that have been cheap forever. Yeah, that doesn't mean that this is their day. There's no law that says after 8 years, 412 days, it's now time. The money flows, and there's a finite amount of money, although crypto disproves that. But
I had an interesting conversation on that point exactly. Someone was asking me why I am bullish on South Africa, why I'm bullish on SA Inc. And I looked at it and I was like, the simple truth around it is the US has run hot. Exceptionally hot. Europe is going through a mess. Markets are hesitant on China because of the regulatory impacts and the political interference and all of those sorts of things. Markets start to look for attractive returns. The US can't keep, even if Nvidia does another year where it punches out 100% gains, the rest of the US stocks might not punch out as much gains as we anticipate, right? And so investors and fund managers and asset managers at the end of of the day, they still have a mandate. And their mandate is still to deliver returns to shareholders. Yes, you might have had a good 2024. Yes, you might have had 40% year. Great, lovely. But when your new year starts, it's almost like it resets to zero. Like you got to have another good year. You can't
you got to start again.
That's it. You can't just not have a year where you're like, oh, we're not performing, right? And when I look at it from that perspective, and I look at all of the geopolitical risks around the world and everything, suddenly South Africa doesn't seem like the worst place to be. The government of national unity is held. We've gotten load shedding under control. And as I say these things, you know what I mean? Transnet. But you start to look for, where can I get returns? Where can I get attractive returns? And you look at something like Sasol, which we'll get into in a moment. 80 Rand back up to 100 Rand, 25% gains on a stock is something any asset manager is going to see as mouth-watering when they've got liquidity that they can pump in. And then you've got markets where you're like, oh, we're uncertain about this, we're uncertain about that. You know what I mean? So I think as long as South Africa can keep on the right track, and part of that right track is potentially meaning a deviation from policy, which we'll get into in next week's Market Matters, because the rates decision happens next week.
Of course.
On the 30th, we get an interest rate decision from South Africa, and we'll get into the dynamics of that. But part of it might mean our country saying we're going to take a different stance to interest rate cuts, whereas America saying we're going to see less rate cuts. South Africa says to boost our economy and boost our attractiveness, we might do one or two more rate cuts. And just that simple decision could have a very big impact on how the South African return profile is viewed internationally.
Imagine if we got off our grey list in June. Imagine if one of the rating agencies upgrades us. It would still be junk, but upgrades us to
less junk,
more attractive junk. Complicated.
More attractive.
I'm with you 100%.
Yeah.
And but something else I hadn't thought about Sasol. When you say Sasol's up 25%, I'm like, yeah, but many of these oaks were buying $100 ago. But that doesn't matter. New year, new date. They've got a stock in their portfolio up 25% year to date, or whatever the return is.
However they measure it, right? And looking at the Sasol thing, I mean, you look at, when I say where I look at the institutional money, the asset managers, Sasol's run at the moment is Morgan Stanley coming out and saying, we see a fair price target at 225 Rand. The market's like, oh, but we're only still at like 87 Rand. Now you're seeing that even international markets or international asset allocators are saying there's a lot of value there. It might not be in Sasol directly. It might be in other things as well, but there is value in SA Inc. And I'm trying to think of another one that was in a very similar situation to Sasol that I was looking at. MTN. You and I spoke about MTN.
Yeah.
MTN, the regulatory stuff in Nigeria, seemingly to their benefit now with all the changes that have happened there. But that stock as well, moving from 80 Rand back at 105 Rand a share, another 25% gain, 25% move.
A really good technical break coming through on last week's
We're
close.
into the start of the third week of the trading year, and you're seeing technical breaks, you're seeing bullishness.
And it's on the non-obvious. Last year it was all
It's not even on
consumer
results.
stocks. Yeah, last year it was consumer stocks. It was Mr. Price, Fashini, all of those sort of, and I rode the wave lovely. Now it's like, okay, hang on, really, Mr. Price at 300?
No.
150 was a good price.
That's it. 300 is expensive, but MTN is not.
And now suddenly it's all those other stocks. And those are partly, I mean, there's lots of, MTN is more a rest of Africa story than it is, I think we saw their second biggest market. But I think there's also just a sense of, the devaluation of the Naira seems to have halted. So
was excessive as well.
You've got the new, but et cetera, et cetera. So there is, I like that idea where suddenly those other stocks, which, and in some cases might be a little SA Inkish, but still, they're suddenly getting their day in the sun as well.
That's it. And I think if you have the time and the patience to kind of sit there, find the stocks, find the pockets of value, you can literally ride a couple of really good waves, right? If you look at something like the platinum sector, that's not going to ride out. You're not going to see these moves in 2 days, but you might. And when you do, the commodity kind of super cycle runs hard, fast, and runs like quite well when it does, right? So it has been stagnant. Nobody's denying that it's been stagnant, but it seemingly it looks like it's bottomed out relative to the more bad news comes in. Markets are like, no, we're not creating new lows. This is an absolute this is where we're willing to call the bottom. And that's always a good thing to see, is that news is not necessarily being perceived as negatively as it was, and markets are reacting more calmly. There was a time where markets were exceptionally volatile, where one piece of news came out and everybody lost their minds, right? And I think that was off the back of pandemic stress and inflation stress and interest rate stress and
Sure.
stress on stress on stress.
Yeah, 100%. Yeah. And it just, I mean, to your point, it does just feel, as a South African, in this January compared to last January, the two big, there were lots on our mind. But what were the two big issues on our mind last January? Elections, load shedding. One went all smooth and the ANC was like, hi, ball, we lost, and then went off and sat in the corner instead of throwing sticks and petrol bombs. And the load shedding mysteriously on 26 March, my little app said, hey,
Just
suspended.
This was never really a problem.
Never came back.
Whatever you thought was a problem for the last 16 years is now suddenly no longer a problem, right? So granted, there are some that will argue that there's been a lot of work behind the scenes and all of that stuff, but it really shows you, I think for me, when I look at that and I look at the conversation we had in our deep dive about Cape Town, when you're in Cape Town, you see for the first time possibly the full potential of South Africa as a country. Because the whole of South Africa can look like Cape Town. It's the same people, it's the same governments, it's the same businesses. There's no Sasol that operates in Cape Town that operates differently from a Sasol in Johannesburg, right? So it's the same economy, it's the same tax regime. We can realistically, the whole of South Africa can look like that.
Correct.
I don't see why it couldn't.
No, it absolutely can. And I was in Durban over Christmas, and I'd been there in September as well. I love Durban. It's been an absolute wreck, and I don't know that it's on the surface. It looks much better. The beachfront's always been clean, right? Keep that little strip 8 k's long, 50 yards wide, keep it clean, easy. But the city was looking cleaner. Is behind the sort of the curtains better? I don't know. I mean, I don't know, but it was looking better. It's not that hard to do.
It isn't. It really isn't. And there's proof that if you don't do it, there are consequences. And I mean, I think we'll get into this as well around, it's definitely a conversation that we spoke about last year that we're going to have this year. We might even do it next week for a deep dive around what do we nationalize, what do we privatize, how do we strike that balance and all of that. Because you think about a couple of examples. Now the government wants to list state-owned entities. At the same time, you have a bank like Itala Bank that lost their exemption now being pushed towards liquidation. That dynamic, that conversation is a whole conversation for another day. But the point around that is to say the potential in South Africa is there. And that potential comes with jobs. It comes with creating opportunities. It comes with reducing unemployment, right? It's just about whether or not there's a willingness to unlock that potential.
And that seems to be the problem, right? The
age-old problem.
The abject lack of a willingness, a keenness to actually say, hang on, what do we need to do and can we do it? Because, don't get me wrong, running a country is probably a hardish job, but it's not rocket science. Man. Putting a rocket into space, that's hard.
That's it. Unless you're Elon Musk. Apparently he does that regularly now.
He does now, but he didn't initially, right?
He didn't,
We're seeing Jeff Bezos struggle with it. Calling the bottom on Sasol, that's hard. Running cities.
Just doing the right thing.
Running cities is not.
It's not that bad, right? So what we're going to do is we're not going to add anything to our walls at the moment. What we might look at is potentially reviewing the positioning of some of our things. I mean, we had, I remember Sai had a very strong opinion to say that we are not putting Sasol anywhere other than avoid at the moment because of what was happening with Sasol, which was a very valid viewpoint. And we had Sasol at this point, I think, moved out further down on our list. I'm trying to look through our wall of preferred picks. It wasn't, we'd moved it out of sort of where it used to be in the buy area and we'd moved it down. We might move that up now because we are more optimistic. I mean, the likes of MTN as well. We're more optimistic around the SA story. So you might see a little different wall as we start off the new year. We might do some movements around. But going forward, we will definitely be adding to the wall. We'll definitely be looking at things differently from that perspective. And there's also some surprises coming out on the wall from the wall's perspective as well. So stay tuned for those. Let's take a look at the rest of the year, right? So we're optimistic about SA Inc. We kind of identified where some of the other areas like the US might be concerning or might start to lag or might start to slow down. But overall, are there certain sectors or certain areas that you think might perform a little bit better than others?
Sure. I mean, I still like gold, which is as boring as heck.
Consistency. There's nothing wrong with consistency.
Yeah. There's stuff in the US. I mean, the US S&P is mightily expensive, but that's because of a handful of stocks right at the top end. If you look at sort of the mid caps and the smaller stocks in the US, I think there's still some attractiveness there. In Europe, as much as we deride Europe, I mean, that Eurostoxx 50 is at all-time highs. And we need to remember that the market is not Main Street. The market is Wall Street or Maud Street or whatever the boulevard in Paris
whatever
is
we
called,
call it,
or et cetera, et cetera. And I think, and as to your earlier point, I mean, it's not just, South Africa has its own unique challenges, but the world's had a tough time of it. COVID, worries, high inflation, high interest rates, worries around recession.
Wars everywhere.
One less war to worry about. Trump apparently will end the next one before this releases. Didn't he said first day of office, Ukraine would all be good? I don't know. Yeah. But
he said a lot of things.
I can't help thinking that just generally the world's in a better place.
Yes.
Of course, market valuations in the US are terrifying, and who knows what Trump's actually going to do. And he could juice the S&P, right? He cuts corporate tax to 15%. I mean, long term, that's bad, but short term, even that juices it. But I'm liking EMs. I'm particularly liking EMs. I'm particularly liking gold. And I think my sort of long shot bet would be resources, just more broadly. I mean, we've seen oil running. PGMs are still going nowhere, but at some point they
will move at some point.
Move.
Yeah.
We've got gold moving. We've even had iron ore picking up a little bit. And in fact, my watch list of commodities is actually looking moderately pretty so far year to date, considering it's not many days into the year. We've got copper up 8%, so is crude, so is Brent natural gas. Palladium, platinum, they're up 6%, although they're looking ugly. Aluminium and nickel both up 5%. Maybe we start getting some move happening there.
When I think about the US picture, and I mean, obviously that picture looks very different now with everything that's happened, right? I feel like because valuations have been so propped up in the US, that you've created one of two scenarios. One where if you keep propping up, then the eventual retracement or fallback or pullback is going to be that much steeper than what it is now, right? On the other side of it, if you start to see the slowdown, you see people move out of that space immediately, you get the reset, and then you can kind of continue off. So in either respect, I almost don't want, it's like when we were talking about it last year around trying to call the bottom on things. Here in the US, you're trying to call the top.
Yeah.
And that's equally as dangerous as trying to call the bottom. Whereas you can just go for a slightly less risky approach and say the bottom's been called already, let's just move with that, right? The work's been done. We've seen where valuations will not go below for the time being, and you almost get the sense that the risk you're taking on that is less than the risk you'd be taking trying to call the top. That being said, I know people will not stay out of US markets purely because of the liquidity
But then that Richmond update, man, told you that the Americans aren't as poor as they all said. Turns out
neither are the Chinese, apparently. Right? So that's the other thing is you look at that Richmond update and you look at luxury updates and you look at what happened to luxury stocks as well. And it's for that reason that we put Richmond in our blue chip section from day one. It was we knew we didn't expect the update to be that good. I didn't expect 15% growth per quarter. Like I really didn't. But that's what the value starts to look like. For me, the value starts to look like, okay, which markets have been the most depressed? And South Africa sits quite comfortably in that space, and our companies are not bad companies. They're not companies that are frowned upon. I mean, a ShopRite performs better than, or on par, if not better than, a Target and a Walmart.
It has of all supermarket chains in the world with over 1,000 stores, ShopRite is by any operating margin better.
See? So we don't have bad companies in South Africa. We just have companies. We just have politicians. It's not the company's fault, it's the politicians' fault. So as I said, we're going to be reviewing a lot of our viewpoints around what's happening with the wall and where we're putting certain things on the wall, but we're not going to add things to the wall just yet. We will do that later on. But we've come to the end of the show. We have come to the end of the first episode of our 2020 Thrive. We're going to be having a really good year, and it is time for that surprise that I mentioned at the start of the show. We've got a new parting thought that we're going to be sharing. We're going to call it our unfiltered opinion of the week. It's going to be a statement that Sai and I may or may not comment on. But the point around it is it's going to be something that makes sense, is a hard truth sometimes, might be a very unpopular opinion, but it will be the truth. And it will be, from our perspective, something that is hopefully as unfiltered as we can get it. This week's unfiltered opinion of the week. Are you ready?
I'm keen.
Inflation is the government's way of stealing your money without officially calling it a tax. I'm going to leave it on that note. Until next time, investing isn't hard. Just try it.